Welcome everybody, I hope you're having a fantastic day. This is the Daily Horizon View for the 19th of the 7th, 2019. We'll be having a look at the ASX Exchange Traded Funds. This is my top fives. Our spotlight today is on HJPN, which is the BetaShares Wisdom Tree Japan ETF, and that one's currency hedged. Stick around to the end. Interesting little overview, give you my opinion on it as always. Stick around for that one. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, let's have a look at the top 5 percentage rises. Today we saw GDX, MNRS, my words come out correctly, GEAR, QR, and lastly here, HJPN, which is the Spotlight, so stick around for that one, very informative. So for those who have forgotten, GDX is the Van Eck Vectors Gold Miners ETF, which tracks the New York Stock Exchange ARCA Gold Miners Index, and that is, I think, quite possibly the largest ETF traded in Australia that has a market cap of roughly $12.3 billion. Today we saw a rise of 3.37%, which equates to $1.30. We saw a pretty strong volume here of 118,500 shares traded. Okay, moving along now to the top 5 percentage falls. We saw NDIA, QAG, BEAR, and ETPMPD. So for those who have forgotten, Triple O is the BetaShares Crude Oil Index ETF. That one is currency hedged, synthetic, has a rough market cap of about $27 million. You get a small little dividend here of roughly 1.48%. We saw a reduction in value here of 1.49%, which equates to 23 cents on relatively low volume, or actually medium volume for this ETF, 9,700 shares traded. Moving along now quite rapidly, we're going to take a look at the top $5 rises. We can see here IHVV, number one there, IBV, IHOO, GDX, and BTS. So IHVV is the iShares S&P 500 AU hedged. And that one represented by the index composed of the top 500 largest companies in the US. And as mentioned before, it's hedged to the Australian dollar. Rough market cap for this one is $166 million. You'll have a reasonable little dividend yield here of 2.81%. Morningstar give this ETF a gold rating, so if you think about that as in terms of stars, that is 5 out of 5 stars from Morningstar. We saw a rise today of $4.62, which equates to 1.25%. Very low volume of 788 shares traded. Hopping along now, let's have a look at the top $5 falls. Up first we saw ETPMPD, followed up by NDIA, then U, ILB, and VCF. So for those who have forgotten, ETPMPD is the ETF's Physical Palladium ETF, and that is backed by physical allocated palladium held in the HSBC Bank in America. That one has a rough market cap of about $2 million, so quite small in the scheme of things. We saw a fall of $1.67, which equates to 0.81% on a pitifully small volume here of 4 shares traded. Not much to see there at all. Slipping along now into the top 5 number of trades, we saw Friday, we saw VAS, STW, GDX, VAP, and IAF. So for those who have forgotten, VAS is the Vanguard Australia Share Index ETF. That one tracks the S&P ASX 300. Has a market cap of roughly 3.5 billion. You get a healthy dividend, roughly 4.54%. Morningstar give this a rating of bronze, which effectively is a 3 out of 5 stars. Today we saw 229 trades. That was equal with STW on 229 as well. On the upside here, we saw a rise in the share price of 75 cents, which equates to 0.89%. Moving along. Okay, top 5 for volume. Today we saw QFN, ITHI, USD, FAIR, and a GDX. So QFN is the BetaShares S&P ASX 200 Financial Sector ETF. That one has a rough market cap of $27 million. You'll get a reasonably healthy dividend of 4.47%. Volume-wise, we saw 531,600 shares traded. On the upside here, because we saw a gain of 11 cents, which equates to a rise in the share price of 0.96%. Top 5 for value. I'm sure we're going to see some of the normal suspects here. QFN pops up. AAA, VAS, VAP, and STW. So, as I mentioned, it's the usual suspects. So, as we touched on before, QFN is the BetaShares S&P ASX 200 Financial Sector ETF. People look like they're moving into the financial sector for whatever reason. Pretty low value here. We saw $6.2 million dollars worth of shares traded. Nothing out of the ordinary, I don't think, and not a stampede. You're not seeing, you know, $20 or $30 million traded in a day. So a few people readjusting their portfolio holdings and looking to get some exposure to the financial sector, which I think is cheap as a general rule anyway. And that's probably not a bad way to play that financial sector. So you're getting all the banks, the big 4 banks, plus a few of the smaller ones, and also you're picking up like Macquarie and Perpetual and those type of sort of investment banks as well. Okay, it's time to cast our eye over the Spotlight ETF today, and that one now is HJPN, which is the BetaShares Wisdom Tree Japan ETF, and that one is currency hedged. So the investment objective is to track the performance of the index before all the fees and all that blah, 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 and provide diversified exposure to global competitive Japanese companies hedged into Australian dollars. Why we bothered doing this? So we can gain exposure to globally competitive Japanese companies, as just mentioned. A simple way to access diversified portfolio of Japanese shares. Provides a core component of a global equities allocation. So, you know, it gives you transparency and diversification benefits instantaneously. The ETF includes several sectors which are underrepresented in Australia, Australian share market, I should say. So, you know, if you're looking for tactical exposure to Japanese equities at a low cost than traditional active managers focusing on Japanese equities, so that's another little plus there, cheaper than an active managed fund. Reduced currency risk, so yen currency exposure hedged to Australian dollar, so that's sort of one less worry you have to have as opposed to buying direct shares of Japanese companies yourself. So we saw the net asset value here of $11.63. So trading just above that, $11.64 at the close today, which is Friday. Our market cap roughly $40 million, $39,600,000. We got a management cost here. It's not too bad, I suppose, for an international focused ETF of 0.56%. We have a distribution frequency, which is semi-annually. You'll get a payment in June and July. Dividend yield is lower than Australia, of course. You get a dividend pay year of 2.8%. As mentioned previously, HJPN could be used as a major component of a diversified portfolio that focuses on global companies. So this ETF could give the investor specific tactical exposure to Japanese businesses. So using this ETF as an investment may be useful if you have a particular positive outlook on Japan for the next 5 to 10 years. I think that's the time frame that we should be thinking when we're investing, sort of between 5 to 10 years. My preference would be to use an ETF which, with a broader exposure, I should say, to other countries and businesses in Asia. I just don't think that Japan has a good long-term growth prospect. I think Japan is kind of a slowing economy, or if not stagnant anyway. I mean, there's definitely a few companies that are growing, but I think, you know, it's not really a place that I bother putting my money right now. If you're keen on Japan, I'd have a look at a couple other alternatives here, which are IJP and UBJ. As always, do your research and don't jump into anything instantaneously. This is just a quick look at the top 10 holdings here. Toyota, SoftBank, Sony, Kinensi, whoever they are, Takeda, Pharmaceuticals, Honda, Nintendo, you know, so there's a few common names there that we all know, big international brands. I mean, for me, you know, since inception in 2016, May 2016, you're only looking at 6%. I think, you know, as I was saying before, the Japanese economy is a little on the slow side, and I think you'd probably get better returns somewhere else. You know, something that focuses maybe on a bit more heavily on China, for instance. So it's not something I'd be interested in this ETF anyway. Anyway, make sure we do our research because there's a myriad of options out there. But yeah, for me, this one's not really something I would be interested in. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.